Hello, everyone, and welcome back to Crypto Night News. I am your host, Tony Lee, and today I want to go over a couple of things within the crypto space. But before I begin, I have to say this: I am not a financial advisor. Anything I say or do should not be considered financial advice. Please, please, please do your own research. This is for entertainment purposes only. Now, with that being said, let's look at the top 10 coins. Okay, so it says Bitcoin at number one, 29,390. Ethereum number two at 1,735. Tether number three at 99 cent. USD coin number four at $1. BNB coin number five at 284. Cardano at number six at 57 cent. XRP number seven at 38 cent. Binance USD coin at number eight at $1. Solana number nine at $39. And Dogecoin number 10 at 7 cent. All right, now let's look at the market cap. So currently we're sitting at $1.2 trillion for the market cap right now. It's been that way for a little while. I don't foresee it in the near future going up by any great by by a great amount. I don't see it going up in the near future. But that, like I said, that's just my opinion. Right now, the fear and greed index, let's look at that. It says we're at a 15 today. So yesterday it was a 13. So people are becoming a little less fearful. Once we get past that 25 mark, then we'll start to get into the greed. Or it won't be, we'll start to leave the extreme fear, we'll get into fear, and then we'll start to kind of push towards the greed side. But like right now, like I said, with everything going on, we talked about this before in the past. Inflation, interest rates, like I said, the war, virus. It's a lot going on. So, like I said, but the market is starting to go. Well, people are starting to become a little less fearful from what it's showing on the fear and greed index. All right, so let's jump into some crypto news. So it says JP Morgan CEO says brace for impact. Jamie, not, let's see here. Jamie has not been the best supporter of cryptocurrencies. Nevertheless, the bank, which he heeds as CEO, JP Morgan, has been easing its stance toward digital assets and has moved forward with various plans to provide its customers with cryptocurrency trading options. Let's see here. So he says, looking at the charts, it doesn't take an expert to see that the crypto market has had a rough first half of 2022. Like I said, we're in June right now, so that's about 6 months in. And like I said, coming off of that October, November high, which we were still in the bull run around that time, coming off of that into the new year, 2022, the crypto market has been punished. But like I said, a lot's been going on, so it's to be expected, you know. But like I said, let's read down a little further. It says this crash has seen more than 1 trillion wiped off the market in less than a year. Wow. And if Jamie is right, this may only be the beginning. If the Fed begins the quantitative tightening and sucks liquidity out of the market, that would affect the buying power of most investors, causing more money to leave cryptocurrencies. So, right now, well, I don't know. Well, I just spoke about inflation being an issue, right? So what it's talking about is the Fed basically raising the interest rate due to inflation. So the more inflation that we have, the more hawkish or the tighter the Fed has to get. So far as with these interest rates, it has to squeeze a little harder. So right now, it's said that they will go up by forget how many basis points this month, and I believe they're going to also do some tightening up next month as well. So the higher the interest rates and the higher things are, people are going to have to start pulling money from somewhere. And like I said, if not the stock market, then the crypto market. So I guess that's what it's saying, and I guess that's what we're starting to see more money leaving because, like I said, people with everything like I said starting to tighten up, I guess people like need the money right now. So like I said, they have to get it from somewhere. So it says such a decline could set the market back by a couple of years, putting it in the territory of 2020 lows, Wouldn't that be nice? That's just my opinion. 2020 lows. If you look back at the market and you look back at some of your crypto picks, if you have any, just look back at the market and see what the 2020 prices were. They were actually really low. So if people that bought in early, like I said, 2020, even towards the beginning of 2021, they were able to make a nice chunk of change. When the bull cycle really started to rev up, But like I said, that those 2020 lows, that those were the times, the best times, in my opinion. Like I said, this isn't financial advice. Anything I say or do should not be considered financial advice. But those, to me, in my opinion, were the best times to get in. If not after the bull run in 2017 and the very beginning of 2018, I believe is when it started to decline a little bit. So anytime a little bit past, let's say, the third or fourth month in 2018 up until mid to late 2021, those were like some of the best times to get in. And like I said, people made a lot of money during those times. So if this does happen, if this decline they're talking about right now does happen, and it puts us into that territory, like I said, this isn't financial advice, but those those were some great those are some great values. Just looking back at a lot of those projects. So uh, yeah, okay. So if the crypto market continues following the trend, let's see here. Okay, so it says if the crypto market continues following the trend of the stock market, excuse me, which has been in a steady decline this year, a sharp decline in liquidity would see the stock market rocked considerably, triggering an adverse effect in the crypto market. So, like I said, we're just gonna have to keep an eye out for, I guess, what the Fed is doing. We're have to definitely keep an eye out on inflation and see what the numbers are. And just like I said, keep an eye out on the Fed and the interest rates and how high it's going up. Because, like I said, all of this affects the crypto market. So, like I said, just I tell anybody, just keep an eye out as to what's going on around the world. Like I said, what's going on around the world directly affects the crypto market right now. So. Yeah, so let's move on to some other news. So, in other news, amid crypto bear market, institutional investors scoop up Bitcoin. So, remember how when we very first started, we were talking about the fear and greed index, and some people are becoming less fearful. Um, I believe some of those people are these institutional investors scooping up Bitcoin because, like I said, as it's weird, but it seems like every time the halving happens with Bitcoin, and that means that okay, when people are mining Bitcoin, if they win a certain block, they get a certain amount of Bitcoin, right? So every 4 years, that amount is halved. So at one point, I believe it was 50, and this was years ago. And 4 years later it was 25. Another 4 years later was 12.5. Another 4 years later it was, well, right now it's currently, if I'm not mistaken, at 6.25 Bitcoin if you win a certain block when you're mining the cryptocurrency. So in 2024, it's projected that it will be what 3.125, I want to say 3.125. Forgive my math if it's wrong, but I believe it's 3.125 Bitcoin. So at that point, that's when we should see another bull run around the 2024, if not then 2025 time frame. That's when it's projected that we're going to have another one. Just looking back at past data, it seemed like every time there was a happening with Bitcoin, the value increased. So I think if we don't see $100,000 Bitcoin within the next, let's say, year, or at least year and a half to 2 years, we'll definitely see it in the next 2.5 to 3 years, in my opinion, because it'll be the digital asset will be more scarce, and we're slowly but surely approaching that 21 million mark. So I believe there are only 21 million Bitcoin in existence, will ever be in existence ever. And it's crazy. Well, I'm going off a little bit on a rant, but it's crazy how whoever Satoshi Nakamoto is, he set up Bitcoin so that I believe by the year 2140 that'll be the last Bitcoin ever mined. And I believe he, like I said, he created this around '09, '08, '09, I want to say. So it's just like he created something that puts, well, that's going to last well over 100 years if it's able to stick around. I believe it will, in my opinion. I believe it will stick around for I'd say at least the next. I could see a little over 20 years from now for sure. Past that, I'm not 100% sure, but um, yeah, if this stays around that long, then it's just like wow, he's like he was creative. But anyway, I'm ranting. But let me get back to the story. So it says Bitcoin investments funds are seeing positive inflows while Ether funds continue to be drained, according to industry data. Digital asset investment products registered positive inflows last week through the gains were mainly concentrated into Bitcoin, signaling a more cautious approach to crypto allocation on the part of institutional investors. So a lot of times people are just like, okay, if excuse me, I'm sorry. There's Bitcoin and there's altcoins. People are making like great money off of altcoins, but then, like I said, if people got in early, they're still able to make great money off of Bitcoin. And like I said, these institutional investors can pump a lot more money than, let's say, retail investors can. So they um they can buy up more Bitcoin than the everyday Joe can buy up, right? So you might be able to make some great money with altcoins, but I guess they're saying, I guess it's safer to go with Bitcoin instead. So it says Bitcoin investment products saw cumulative inflow totaling $126 million in the week ending Saturday, according to the latest fund report from CoinShares. So it says Grayscale remains the single largest digital asset manager with over 27 billion under management. Wow. Roughly 99% of Grayscale's total assets are devoted to the Grayscale Bitcoin Trust, also known as GBTC. So that's another organization that's really into Bitcoin. So it says Bitcoin narrowly avoided its 10th down week in a row by closing at 29,900 on Sunday, a mere $450 higher than the previous week. Nevertheless, there are some positive signs that institutional investors are buying the dip. So, I mean, I'm sure you all have heard of that. When you see a dip, buy it. And I'm not saying that, but I'm sure you've heard it, I'm sure. So it says, in addition to the CoinShares report, a Canadian spot Bitcoin exchange traded fund operated by Purpose Investments scooped up thousands of Bitcoin last month. By May 13th, the Purpose Bitcoin ETF has registered its highest ever Bitcoin holdings at 41,600 Bitcoin. That is crazy. So I wonder how long they have been buying it up, or if they bought it up at the high. Wow, that's crazy. But yeah, so like I said, so we see a lot of people, despite this market, Bitcoin has dipped tremendously. Like I said, it's lost over 50% of its value. So people see this as a buying opportunity. But yeah, that's some people are afraid right now. Some people are pulling their money because they feel like, man, the market's about to crash totally, completely. And some people say, hey, this is an opportunity. Like, I can really buy up a lot of cryptocurrency, and then when the next bull market happens and it runs up, then I can sell it. Or, like I said, everybody's perspective is different right now. So, let me know what you all think in the comments section. Do you all think this dip is a buying opportunity, or do you think this dip is a sign that you all should be selling right now? Let me know in the comment section below. But yeah, that was tonight's episode of Crypto Night News. Once again, I'm your host, Tony Lee. If you found anything of interest at all, please hit that like and subscribe button. And like I said, let me know in the comment section if you believe this dip is a buying opportunity or not. All right. With that being said, thank you all for listening, and until next time.